Welcome back, ladies and gentlemen. Bubbles Stock Market Show. We are still on Wednesday, October 16th, 2025, 9:37 a.m. Eastern Standard Time. So the stock market has been opened uh, almost 10 minutes. I have the FANG stocks here, all coiled up in this little box. I'm going to open the box. We'll take a look at the stocks, then we'll put them back. So Apple is still in its upward trend, but like most of the stock market, the whole stock market, had a big sell-off last Friday. So Apple is a good indication of what we will see a lot of in the stock market. We're going to see a lot of stocks that have this big drop last Friday, and then now we're just looking where is the price action trading now in relationship to that drop then. So we see this is in the bottom, price action is in the bottom 50% of this large drop of a candle here. So Amazon sideways, same thing, right? Big drop in the bottom 50%. And it's a sideways stock, another sideways stock. Same thing happening here, but just kind of less dramatic of a drop. But we got a sideways FANG. We got a FANG that was up and then this Friday turned to sideways. So Nvidia I had been looking at it is still in the uptrend, but once this candle came in and I was just flipping through the FANG stocks quickly, I was like sideways, sideways, and then I realized I was like, wait a second, where was Nvidia? And then that was one that I just classified sideways without paying attention to what stock it was. So if this is like the big shot of the stock market, which I hear people talking in a way like that's what they view Nvidia as. And I guess that could be true to someone's perspective. For me, I, because I'm really find that you can trade a stock up, down, or sideways. I kind of really don't care, but so I haven't been paying attention to Nvidia as much. But I admit, and that several years ago, I already started buying books in preparation for this day that I have now Mark Minervini books where I'm going to get a lot better at the can slim method and understanding repeating patterns in fundamental data like this, things like this, margins. This is my friend sent me this, so I pulled this up so far. Beta is around a little bit over one, so it's going to move a little bit, a little bit more exaggerated than the stock market. PE ratio of right around 35. And it's just as a super general rule of thumb without looking into sectors or anything else, I kind of look at 25 as like just a bit of a standard, just so I have some standard number to look across all stocks at. But I can see how depending on the sector, industry, and all this stuff, it could make a difference, and in fact does. PEG, price earnings the growth. I think around one, what I was taught around one is a good number, and so here we are around one with that, and not unreasonable on the PE when you compare it to other FANG stocks. Enterprise value to EBITDA, I was taught 10 or less is a really exciting deal, and we're getting close to 10. So we're getting close to 10. We're getting close to one over here. It's not a terrible on the PE, and here is possibly for at least long-term viability, the most important thing, profitability. Look at how profitable this is. Gross profits of almost 60%, operation margin of almost 50%, profit margin over 40%. Now we get into, so just as a to own this business, if we were looking at it with a Benjamin Graham, how would we value this business to own it? Yeah, I would like to own this. I mean, it's super profitable. You take it over from day one. Look at you, you're making money. And then most of, well, for me personally, though, that is not how I'm looking at this business. I'm looking at this business of either somehow have a position in it, a long-term position, or any type of way I could make money with this because it's sort of like inventory. I'm going to compare this stock to other stocks. So I see that like it's safe as definitely would work like a wheel strategy stock. It could you could use this for a lot of different things. This would be an ideal candidate to actually have on your watch list because this company just based on these numbers here, the gross margin, operating margin, and profit margin, this is a really, really strong company. So it's worth looking at its option chain to see what it can do. And then we can look at the dividend and things like that. But we'll save that for later. Let that be one of the last things, and not have that the dividend be much of a decision factor in our decision making process if we're going to trade it. Because if it has a good option chain and it's just a strong stock, and especially if it trends up, which semiconductor stocks can, then it's possible to make a good amount of money with it. So let's put that on hold for a second. We're going to come back to that. And in all of these stocks, though, Google, I have these stats here for Google as well. Maybe just this right here, but we'll look at the other FANG stocks as well, and we'll compare it to Taiwan Semiconductor. Let's pull that down. So we see Google up. Let's finish our tour of the. Okay, so we did indeed finish the. We see what's going on with the FANG stocks. Now we're almost 15 minutes into the market being open. Semiconductor Taiwan stuff. So let's minimize that. And normally I have something pulled up here. I would have my main thinkorswim here right now. However, I'm not doing that because I'm recording this and it has my account information and a lot of data. But normally that's what I'm looking at. So I'm looking at that over on a different screen. And then on this screen that I see that on, I would normally have, let me just put change this. I have this on a different computer, but it's actually, I'm looking at, I shouldn't say. So on a computer to my right, the computer straight ahead of me, I'm seeing what you're seeing. Right, this is the screen that's being recorded. To the right of this screen, I have a separate computer, 16-inch monitor that I have this set up on, anything, and it has my live account on it. So it's sort of like my backup in a way when I'm recording with this other computer. And the way that this computer is set up, my main thinkorswim is on the main computer and I'm recording on a connected screen, but it happens to be that the screen is the biggest. This is the biggest screen that I have. And the actual computer I'm using is like a 14-inch. I think 14-inch is the perfect laptop inch for me personally. So I'm able to take a look at this, and I've shown you this before. We'll go through it again really, really quickly. And I have the ability to see the S&P 500 right here, the VIX, the volatility of it right here. And these two together are very, very helpful. And then this one, I'm pretty much on a weekly basis shorting strangles on. This one, I'm looking to add a second one like this and be shorting strangles on both of these on a weekly basis. And in a way, look at in a way that's my besides having a position in XDTE, those three, XDTE and these two, are my weekly paycheck. And then IBIT and BTCI, Bitcoin Action. IBIT is a lot better for option trading and maybe holding, not sure. And this one has an option chain. It's not as good for option trading, but it does have an option chain and it has a really great dividend. So it's really good for holding. Maybe this one, I don't know, you can compare, like they move kind of the same. So, but that would be someone could do a more in-depth study into it. I'm good with building a position in this and sometimes trading options on this and taking that money that I'm trading the options on and buy and building more of a position in this. I feel this is a little more risky Bitcoin stuff compared to something like Coca-Cola and Mo because these two are dividend kings. And so at minimum, they've been giving annual income, quarterly income for over 50 years, and they've been raising it every year. They've been giving a little bit more. So when you compare that longevity and that track record, there's like a built-in safety and security, and they have decent option chains. These are not necessarily the like if you're just looking for the best option chain to trade, it probably wouldn't be these, but because they have a pretty good option chain and what they are, and you actually and what they are as far as dividend kings, they bring a lot of value to the table, so they're really worth having actively having them in your portfolio. FCX is just an all-around good stock. It is just a good stock to have in your toolbox in order to be able to generate income on it, and it will just come in handy. Uh, this one, this one, and these four are more, I would say, trendy stocks. They're newer stocks. Some of these, if we pull up, let's see, with FinViz, SMCI. Look at this. Oh, let's see. Wait. Okay. Profit margin, almost 5%. No dividend at all. Uh, Peg get closer to two than one, but we're still in that area. Enterprise value over EBITDA around 25, which is not exciting at all but because of, if it has a good option chain, then I could definitely entertain selling cash secured put options and to really give you uh, a, a secret that I think I'll figure out a way to charge a lot of money for later is selling them over 1 year because you can structure a portfolio of selling leaps, minimum of 1 year of cash secured leaps or naked leaps, but the depend on how you play them out. You could set this up, and if it's over 1 year of length, then it will be charged at long-term capital gains per my legal team. So I'm doing that. I'm doing a significant amount of that. I started on the selling option selling part. I really have started factoring in taxes quite a bit more. So this some of these, let's check out Oakville. So this one actually, this is really good because this is probably going to spring up again. I don't know exactly when, but this one, I think this is a good stock for uh, buying the actual stock, one share to 100 to whatever, but buying the actual shares of stock because I think that this price around here, around 50, 54 to $55. I think that's a pretty good entry price because I think it's going to get back up to around 60. And I think because it got up to 62 and 36, I think that it's easy. I think it's realistic to say it can get back up to 60 again, and that it's kind of setting up too. The moving average is on top of this one, and it sort of is has this cup and handle type of look. We're looking at 3 months of information right here. 3 months of information, each candle being 1 day of information. So we're really seeing a pretty good view of what's going on. And when we put that in correlation with, let's just do it this way. We put that in correlation with the overall market is pushing up right now. I get it. Yeah, it's pushing up right now. It's pushing up. So this as it's pushing up, that helps. You know, the cliche is a rising tide raises all boats. And what was right here? Forgot I'm doing this. A rising tide raises all boats. You know, our tide overall, on when you look at the full markets, it's rising. So uh, even though what's going on with the S&P today, it's got a down day, but it dropped down here and it's rising back up here. And when today is done, there's going to be tomorrow, and it's probably going to kind of keep trying to rise up and test this point again. And obviously, there's stuff going on in the market that's making it a little more volatile, and um, and we got to figure out a way to capitalize on that volatility while we know, like, one way we can capitalize on it is it causes these sell-offs. It causes sell-offs in stocks that overall are still in their glory day of having money pushed into them. And I think this one, SMCI, is one of those. So I think that's great. And I think that when you if you can really get in tune with being a one share in the one share gang. What I mean by that is, really embracing trading one share at a time, because there's a lot. If you look at trading one share at a time, there is um, there are a lot of different stocks to trade, a lot of different stocks. And granted, it's you would probably have more stocks to trade than you'd have easily have access to money too. Or if you have really deep pockets, this would still be the greatest way to do it because this is the easiest way to scale in. The stock market is a very scalable business, and this would probably be the greatest. If you had a lot of money, this would probably be the greatest thing you could do for yourself is you start with one share because everything is scalable from there. Then it's just like if you can successfully manage the risk, and also not just the risk, but successfully pick a good quality asset as we're looking at these different fundamentals and things like that, and then understand its option chain, understand how to use it, and understand how this particular underlying is going to be interacting in correlation with the rest of the market, and figure out what that bigger picture of the market is. Find this asset, put it in there with a good option chain. Um, then what ends up happening, you can do it with, like, this is a great example. Let's say you bought earlier today, because today, let's see, we could have bought somewhere around here, 54. Let's say you bought 54 to keep the math kind of easy. Let's say you bought at 54. 54. And let's say I'm correct and it's gonna trade up somewhere, let's just say at 60. We plan on selling it at 60. Minus 60. So a $6 difference. So which on one share is not exciting just by looking at $6 for a lot of people. Honestly, for me, it's exciting. Like I take $6. If I can find an easy way to make $6, $8 in a short amount of time, sometimes in a week, like I've definitely done that. I've had a lot of trades where I made less than $20. And I'll tell you what, it was worth every penny. It was worth more than every penny because it started giving me this understanding. And one reason why I was okay with doing it is because I really understood the scalability. If you can do it with one, then you can do it with two, and then it's just how much money do you have? So you can reverse engineer. If I can do it with one, with this number, how many shares do I need to do in order to make $1,000 in X amount of time? It's very scalable. And then when you add in options, which we're kind of getting at, you're gonna love it. So $6 right here, right? If you, of course, if you did 100 shares, then you're looking at $600. How long would that take? I'm not sure. I don't think it's gonna happen today. But let's say it took whatever a week. It took 2 weeks. Who cares? Because you can kind of do it in multiple ways. Plus, this is the other thing. And the time frame, there's lots of different ways to dial in time frames. And that is one of the key advantages of the stock market is it's going to give you these different ways to dial in these time frames. But to you kind of use the time frame dialing in to your advantage. You kind of can you manage this around your life. It will give you that opportunity. And part of the structuring of doing that is understanding like, okay, so we're working with a $6 move. And let's see, do I have all right, so here is that stock, SMCI. SMCI. Let's maximize it here. All right. And so here is about 3 months, right? So I think it has in the 3 month time frame, it's got a bit of this cup and handle thing. I think we're pretending we bought it around 54 and we are setting up an exit target for 60 only because we think it's going to keep going higher and we want to work with something realistic that we think can be done. And you can do this with one share just to like get in and get out and build confidence. Every time you do this successfully, you're building confidence. You're building the habit of it. Everything. It's great. You're building the to recognize this pattern in your brain. It's kind of euphoric. You make money and it gets exciting and it will easily become a fun game in your life when you are doing it in a profitable manner. So let's say we bought around 54 and we're looking at 60. Actually, I mean, if I was really doing this myself, I'd probably be setting up for 62, but maybe 61. Let's look at like 61 because it 60, 61, somewhere in there. So $6 or $7. You're looking at like a $6, $7 um, movement that we're looking to grab. And so we could go out here to about 90 days, grab 90 days of time, and now we're looking for like an at the money strike to start this search for what would be a good call to purchase in order to profit to take advantage of this $6 to $7 movement in the price. Because when we look at delta and we implement delta into this calculation, which delta we find here, and right around at the money, you're often getting around a 50 delta, sometimes lower. This one seems to be a little bit elevated. So sometimes I have to go deeper in the money to get like a higher delta. But so with this particular stock, like let's say we we had used the we were saying buying at 54. So it very well could have been that I mean there was a time where this 54 was in the black. And as the price went up, that as the price goes up, you see the number is lower. And so that becomes in the money. And so the power is we're talking about a $6 to $7 price move. So let's say 650, $6.50 move times what is the delta? Because the delta is the change in the option premium after, per dollar move. So what we're looking at now is we are kind of going to be calculating how much theoretical profit would we have made in that type of movement. So let's say let's just go with 58. So because the option contracts are dealing in increments of 100, we would take this number and multiply it by 100. So with learning how to trade profitably on one share and how to figure out, hey, this stock has a good chance of realistically moving $6 or $7. And look, it hasn't moved yet, right? It has not moved yet. So it's at the beginning of a setup. How did I notice that? Well, I noticed it through a lot of monitoring these, but there is more than this stock. Like there's a handful of stocks, six of them, that they set up like this often, right? These four and these ones right here, and there's probably other ones too. I mean, in a way, FCX is kind of doing it. This is what happens, and as I'm looking at all of these, right, I'm noticing that. I started noticing that after the drop. But nonetheless, here the next thing to move on with is you can learn how to do this. You're monitoring multiple stocks, right? Hood, Palantir, Tesla, ASTS, SMCI, Oklo. These are the six that I'm kind of working with at the moment, but I'm willing to change them out, right? As things evolve. But these same kind of patterns tend to set up. ASTS, once that set up right here, kind of the same thing. See how it fell down, it was riding around this moving average, and then right here, same thing, right? Big thing up, right around the moving average. Boom. This time it took off and it hasn't really slowed down. It went a little sideways here and kind of bumped back up, but there's other of these stocks will run like that. And sometimes because the average true range of how much they move when they move is relatively big. For example, let's look at Tesla and Palantir. Now, that's why these stocks, even if you are in the one share gang, having this in your watch list, these two stocks, more expensive stocks, are um, are good to have because when they move, I gotta find a place to just do it like this. When they move, a daily ATR of $7, and then the weekly is going to be a bit more, and the monthly, of course, a bit more. I just happen to have easy access right now to um, it's the fastest way to pull up an ATR on a daily. So Palantir, how about Tesla? Look at a daily ATR of $19. Isn't that amazing? So that's one reason why I like Tesla so much. We will just, on this 3 month, without really looking into it too much, right? On the 3 month chart, it moves an average of $19 in a day. Now, it's factored over X amount of days, so there's probably going to be some days where it doesn't move $19. This one, it moved a lot. 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 This one, it moved a good amount. This one, it moved a good amount, actually. And let's take a look at that, actually. Let's take a look at this one. So the highest it traded is, we see it here, 340.55. The low, oh wait, let me hover over there. Now I'm hovering on it, and then the highest, okay, look back up to that H for the high, 331.37 is the highest. Lowest was 314.60. And oh boy, we get out a calculator that will not be, will be off screen. So I think it's going to be the easiest for me at the moment. So high of $331.37 minus a low of 314.60. So in this candle, it moved $16.70, 77 cents. It moved. I'll put it here as a reminder. So in a candle that doesn't really doesn't like that looks like a big candle. This really doesn't look like a big candle, right? This must have been at least $5 or so of movement. $16.77. All right, we're gonna hold that. Now let's remember how the option chain works, and we'll just move over here to Tesla. Even though it's probably roughly going to be the same. Okay, now we're still in 3 months of time here. That was actually that was in that scenario, it was a down candle, right? Uh, movement to the downside. That's true. And then let's look at what happened afterwards. Right? It was movement to the downside. This candle right here, right? This candle, and during that day, it moved $16.17. This candle. And then what happened? It's a movement to the downside, is around this 200-day moving average. Tesla bounces off this 200-day moving average, comes up here, kind of rallies up high, drops back down to this 200-day moving average, and then, which is a common occurrence, right? We saw it on SMCI doing that. We saw it on ASTS doing that on these moving averages after it drops up or pops up, drops down. Same thing here. Now it kind of comes up through here, but it's battling this resistance here. And then, boom, it has a really big movement up here. And so what we are trying to do is we're trying to pay attention, trying to learn how to pay attention to this stuff. But then when we get in the ability to be able to predict movements like this, then we're looking for an opportunity to go long, because overall the stock has a tendency, the stock market has a tendency to go up, and we're going to factor in that natural buoyancy. So that leads us to sometime, around, we see something like that in a chart, we're looking at buying. Now the same thing is pretty much true though on the put side if the stock's going down, right? Because it's all dealing with delta, and then you're buying something. In this strategy, we're buying. We're either buying a put or buying a call, but we're going to be net long, going to be a net debit. Money is being taken out of our account, and so it makes it more of a a timely thing, a sniper type of thing. When we are selling time, the strategy of selling time actually allows you to place sloppier trades and succeed. So I've gotten away a lot of times of just sloppy trade placement because I'm selling time. And there's a built-in protection with selling time. In this case, I'm buying time with the option. So that protection is not there. So I really need to be professional, skilled surgeon surgical. At least that's my goal to be that. That's my goal because the we're it really boils down to the option Greeks, which I'm not really going to get into a whole lot right now, other than saying that we're dealing with delta in this. We are trying to use delta to make money. Where normally what our bread and butter strategy is selling theta. In this case, because we're trying to use delta, we're trying to make more bang. We're trying to make more ROI in a shorter amount of time, and because of that, it's like a firecracker, right? Versus a slow fuse. And so we're looking at around like a $16 move during that day. But let's say we catch what could we look at as a theoretical? It moves around 19, it moves 16 that day. Okay, let's say a $10 movement to before I look back at the stock market. Let's say a $10 movement. You catch a $10 movement. You learn how to do this stuff, and this is ultimately why you want to learn this stuff is so that you can dial in catching these movements. So you see how Tesla moves a lot. And you're not asking for anything unreasonable if you're asking for $10 out of an average of 19. You're asking for half of that. If you wanted to be more conservative, you could go for $5. But let's say you work on your skill and you're really trying to make money at this. So you're looking at catching a $10 movement. Now, very often when we look at these option chains, we're going to see around a 50 delta at at this at this place of the option chain at the money. It's around a 50 delta. And right now it's a little elevated because it's closer to a 60 delta. But we're at like a 50, 50 delta, 50 to 60 delta at the moment. Sometimes it's like a 40 to 50 delta. And right now it's a little on the higher side. So let's say we'll just go with this. You catch a $10 move, and each dollar, your position is changing by 56 bucks, right? Times 56. $560. That's on one contract. And you can you can play with these numbers. I know the next question is how much is one contract. With this, you're looking. This is let's say you get 49, 6 grand, 6 grand to on this make potentially like 500 bucks. Was it 50, 56 times 10? Yeah, 560 bucks. Let's go. This is just to keep the math easy. Each of them are kind of exaggerated. 10% return. So I guess it depends on the time frame, right? 10% return because a 10% return is pretty good. A 10% return is pretty, yeah, and especially if it's in a relatively short amount of time frame. But it's still pretty good. It has to be in somewhat of a short amount of time frame because we're dealing with a 3 month option. We're looking at like a day to a week or something. When I'm doing this, I'm generally looking for a day trade. So uh, And what I'll do in order to get the way that is difficult, in order to like cheapen up the process, is it's easy to look for lower, shorter duration options. But I think that is that's where you can really start getting burnt with a strategy, and especially in the beginning. So the great news though is like if you say Tesla, well, Tesla's really expensive, which it is, right? To $6,000 for an option contract. Well, look at this. Let's look at let's look at gold. Gold has ultimately been going up, and let's take a look at. You can do the same thing with gold. Let's take a look at GLD. Now, how long will it keep going up for? I don't know, but the charts will let us know. And obviously, this is not taking a physical position on gold. This is just playing the price movement of gold. So if like if the word gold somehow stirs up prepper stuff in you, either you wear the tinfoil hat or you point the finger at the tinfoil hat. Either way, if it's stirring up any of that stuff or anything like that on that continuum, this is not that. This is not that. This is not that. This is man. This is just playing the options here on an instrument that's moving, and it happens to be the gold is moving up. So look at 90 days, around 90 days. All right, 90 days. We go to at the money. Same. It's roughly the same thing. Look at it's around a 50 delta. It's 54. That's what's so awesome about this, right? You start learning options, right? You you know. I think the best the best thing that I can advise you is the same thing that I have been like send trying to establish a message around for a long time. And that is start with selling cash secured put options. Start with that. And and if you don't have enough money to do that, you're starting in your mind, you're learning how to do it, and you're starting to build a one share at a time type of portfolio. So learn to sell cash secured put options on tickers like MO and KO. The MOKO, FCX, I think those ones are great to great to get started with right at the moment. And hold on. All right. We'll start. I apologize for not bringing this out anytime sooner. And I don't mean just for this video. I mean like sooner as far as in these bubbles, stock market show videos. Boom. Okay, so I put this together. So we have all the FANG stocks in this category here. These are more for a reference. Like as far as being a one share gang accumulation, it's going to start with these three. And your sort of like least profitable stock here is FCX. So profit margin, least profitable is FCX, but it's still profitable. Dividends are great. Option chains, great. It's in a great industry. Obsolescence risk is pretty much null and void with this company. This is a company that if you buy at good prices, and right now, if you look at the um, PEG and the enterprise value to EBITDA, it is pretty good prices. I get it. PE is a little high compared to like Mo here, but compared to Coca-Cola, it's a little high too. But look at compared to Apple, it's not really that high. Compared to Amazon, it's right on par. Compared to Microsoft, it's a little lower. Meta, it's a little more over here with Coca-Cola. But look at this, Nvidia, 50, 51. 30, so 30, it's like, it's not that bad, especially on this, because this really makes up for it. This is good. This is pretty good. And it's profitable, right? And the option chain is good, and the dividends make up for it. I gotta put the dividends on here. I don't have them right now, obviously. And um and and building up so this would be the worst one, right? So one share at a time. Any of these stocks, I am building, I have positions in. All three of these, I have positions. I think for me, these are stocks that I want to own. I want to own a lot of them. And I feel in a way that if I was just starting, if like just getting my mom to start or someone that I really cared about, in this case, trying to create a business of helping people and caring about my customers, like these are the three that I feel good with. So starting, one share at a time, if need be, right? Or selling cash secured put options on these three and take an assignment and experiencing what it's like to build a portfolio that way. It's a pretty easy, not non-time consuming, lucrative endeavor that gets that builds the fundamentals of option selling and reading charts and things like that to start implementing more advanced strategies into your life. Look at this ATS already. So pre-market, right? We know that these stocks are tend to pop to the upside. I don't know if we know them, but I know it. That's why I'm watching them. And this is what it looks like. It usually looks like there's some sort of downward movement. Pre-market, it'll be doing the sideways thing, and this is the first hour of the day. We're just finishing the first hour of the day, trading day, going into 10:24, finishing the first hour of the day, and ASTS again on a tear, breaking 100. So it's probably going to build a floor around 100, and we'll see what it will go to. But ASTS, let's take a look at where. Let's take a look at ASTS. Is that ASTS or yeah? PE, non-existent. PEG, non-existent. Enterprise value over EBITDA, non-existent. Gross profit margin, losing money. Operating profit margin, losing money. Profit margin, losing money. No dividends. They can't afford to pay any dividends. So, I mean, but as far as trading, man, it is definitely has been on a tear. I guess I don't have the Oklo one over here, just six, just these six, so I'm working on keep developing my strategy of of day trading and swing trading, just to keep this video going because uh, I want to figure out how to do the live thing. So I guess I'm just practicing on babbling on at the moment. But let me show you this because if we got the stock market open, why not record it? I have a position right now on. I now have a position on now. I'm short a strangle on now. So I sold the 970 call and I sold the 850 put and I reach max profit if now stays between those two numbers by the end of this contract period, which is the 17th, which is tomorrow. I started opening this position on Monday. That's kind of how I have been doing it, although sometimes I look at opening on Friday. I like to open on Monday because anything that might happen over the weekend, I'll start noticing it in the futures charts and be able to look at the news that's coming in because the futures market opens on Sunday, which makes Monday trading exciting. Start off a new week and then Monday, in the past when I lived in Hawaii and was working full time while trading, I would wait until Tuesday. I would skip Monday mainly because like I really wasn't able to spend much time in front of a computer during market hours because I was sleeping and then I was waking up and getting ready to go to work. And I know you can say, well, you should wake up earlier. Yeah, you're right, and I did. But at some point, like I do not want to be waking up at 3:30 in the morning. I don't want to be waking up at 4:30 in the morning. So, but I have such a drive to win in the stock market that I uprooted my 25-year life in Hawaii to move myself to the Eastern Standard Time Zone in the cold heart of West Michigan. Maybe there's some colder, definitely are some colder places that I could have moved to, but I definitely relocated here in order to be able to sit in front of the computer more. So now I'm much more open to entering positions on Monday, which I did. However, going back, if I could not be sitting in front of a computer all day on Monday, and I knew I'd be doing it all day on Tuesday, and all day on Wednesday, and all day on Thursday, and all day on Friday, and as much as the day I need on Sunday, because the futures market opens, I probably would maybe still wait, but I'm not sure. Anyways, no shame in waiting until Tuesday. No shame in waiting until Tuesday. It's a pretty smart move. If you got kids, you got full-time jobs, you're going to be busy moving things around. And I don't just mean like moving furniture around. I mean getting things done. You're doing things in your life, and you you want to wait, even though you might make a little less money. That's the thing. If you wait one day, that means you're instead of selling 5 days, instead of capitalizing on 5 days of theta premium, you're going to be on four. But that's okay for certainty. I think it's okay because uh, as humans, we crave a certain amount of certainty and and predictability, and so we're trying to emulate that in the stock market for us, and it's not necessarily easy. So in this case, we're making it a little bit easier because it's weekly, right? That's predictable. Weekly, that's easy to manage. That's an easy, predictable thing. If I had said, well, it happens every 10 years, that's a little bit harder to manage, and it's not as easy. Right, 5 years, even once a year, that's a little bit easier to manage. But a lot of people have a hard time following through on one thing for 1 year. That's why usually New Year's resolutions are always the same because they haven't got that completed in their life to move on to something new. And so 1 week is easy to manage. Also, my favorite jobs I've ever had, I got paid weekly. The only thing I liked more than that is daily, but weekly is pretty good, and we can emulate that with option trades to help in the beginning just subsidize our lives. At some point, maybe move it to completely financing our lives. And if that is the route that you are interested in, I got good news for you. I'm a couple months ahead of you. So I'm I am ironing out the kinks of trading for a living. Oh, and so now what's going on? now what's going on? What's going on? So this is a three hour 10-day chart. This is a 3 day 1 hour chart. This is a one one day 15-minute chart, and this is a 1 day 5 minute chart. And I use these for these chart setups like this for more strategical, more surgical entries and exits of positions. You definitely don't have to do this. When you have surplus time for charting, then you can definitely add it. But you can get a lot done with just like the daily chart. It depends how in depth that you want to get with it. Obviously, I like this. I like this. I like the 5 minute chart. I do at times watch things on the minute chart, and I think they're pretty exciting. But it's more of a novelty, and I'm just sort of warming my mind up to it. Not really like I think as I said, like these four boxes for when I'm trying to be the most pinpoint surgical. I want these four boxes. And sometimes I'll have these four boxes on a different monitor, and on this monitor I'll have a small minute chart. But I don't really need the minute chart. What I feel like I need are these four boxes: 3 hour, 1 hour, 15 minute, and 5 minute. And then the time frame, I guess I could kind of play with it, but I have played with it over time, and I'm okay with this at the moment. I think this works pretty well for me, the 3 hour. And then there's times where I like to, depending on what stage I'm in or what I'm doing. With now, I've been trading now long enough that I normally don't do this with now, but if I was under a little bit of duress, I would definitely pull this up. So, okay, good. Everything populated quickly. So obviously this is my build window, and this is the window I go to when I really want to hone in on one particular stock and one particular stock and and figure it out. So I got 1 year, 1 week here, which I usually leave unzoomed like this. So I'm getting a lot of information in a small window here. One year, 1 year of trading, and I'm able to see it pretty clearly because it's on a weekly chart. See the candles, pretty clear, pretty detailed. And then down here, 3 months, 1 day. And a lot of times I will zoom this in. I'll just like click it in one, but not necessarily all the time. But sometimes I will do that. And here we got the 30 days of trading, 15 days of trading, 3 hour, 1 hour, but the same thing, volume profile. So I got a 1 hour volume profile, 3 hour volume profile, 30 days, 15 days. And I like it. I like it. I think it's helpful. I really, really think it's helpful. And I think that um, it's true. You can just look to the right and you can probably see the same thing. But I think like the volume profile in a way is sort of like the risk profile. I like that and I don't mean it does the same thing. I mean that it allows my mind to see the same thing from a different facet. I think it makes it easy to see a different facet of the asset we're looking at when I'm using the volume profile, especially on this window. It's super helpful for me. But also I like using it on the biggest time frame, like a 5 year time frame, like a monthly time frame, a 5 year time frame, or do I have it set up on a monthly, a weekly, and a daily? And then I forgot the years. Uh, anyways, yeah, the volume profile thing is good. And so this is where I would get if I'm just first learning to trade something. Forgot where I was going with that. Sorry about that. And let's look overall. Let's look at the markets. I need to look at that. What do I have positions on? Okay, I've got now. Everything is going great with with now. I've got on my put side, I've got two like about a 2.5% chance of expiring out of the in the money. It I like to look at probability of in the money, but I noticed it definitely makes it more difficult to communicate. Like it'd just be easier to say I have that it has a 80 whatever 98% chance of expiring worthless. Like makes it super easy. For with this it's a little more complicated. What am I going to say? It's got a 2.4 per 2.4% chance of expiring worthless. No, actually it doesn't have a 2.4% chance of expiring worthless. It has a 2.4% chance of it expiring with any value. But I guess no one talks like that in the stock market, so it doesn't really come out too eloquently that way for me. But for some reason, that's what I like to look at. I'm looking at that number. On the call side, I like to see it consistently throughout the week dwindle down, go to a lower and lower number. And maybe I should look at, flipping it because we can do that. We can under our monitor tab, which because I've got all this like personal information, I'm not gonna pull that up right now. But I will tell you what I am thinking about is how can I create some membership club where I can and just show my full account and deal with everything in real time. Uh yeah, and so it's been an hour and I've just rambled on. I want to be live in the market and gonna be, which I was I'm ready to be watching the market. I've got to cruise positions on right now though, so that this is what I love. I really really love the stock market because of this. So I've got this position on service now, and it's going to expire in a couple days. Not a couple days. It's going to expire tomorrow, and then Monday or Tuesday, I'm going to put another position on, and I'm going to look to see how much money can I make on average every week on service now by selling short strangles with one contract. With one contract. And I will tell you this that I'm okay with this with using up to $20,000 of buying power per contract per short strangle. So if I'll just leave it at that. And that besides my dividend portfolio will be uh my bread and butter. So actually, I should not have said that so quickly. There's going to be another component of that would be my, let's say, highest energy intensive endeavor of income, theta income. There's a weekly trade. I got a weekly theta trade right there. But I also am going to be doing other theta trades that are just going to be longer in duration. And because I have really been taking a big look into when how this option premium will be taxed and when. Right? These are things in our control as option traders. It's really beautiful. We have some degree of control over how our option premium is taxed based on what option premium we sell. Isn't that fantastic? Yep. So you have some degree of control, and I have begun to factor that in as well, getting that factored into things. Uh, this one though, yeah, I want to dial this in, and then I'm looking to add other stocks, other potential candidates that are good potential candidates are all in here. Okay, some of these already got moved to some other places, but as far as short strangles, ServiceNow came from this list, and so did Crowd. And so far, these two are doing well. Um, any of these high price stocks might do well. Like this one, I think this is Broadcom. I looked at this one a little bit before. Oh yeah, ASML. I forgot exactly what this is, or even I forgot even broadly, remotely close to what this is. It's probably some tech thing and expensive stock, so that one might make for a good short strangle candidate to work out well as far as the same way that now is working out because it's expensive stock. It lends easily towards this. Okay, let's just take a quick look at it if I still got this pulled up. What was it? AS. This is why I just I love the markets because of how easy this is, right? ASML. The only thing that's making it difficult is making a YouTube video. That's really it. That's where the difficulty is being added. Okay, so let's take a look real quick here. I like to start at looking at 1 day, and this number in parentheses here. This is showing us that thinkorswim is pricing in implied volatility. The implied volatility is pricing in a move of about 27 bucks in either direction. Right? And I like to take this and look at it in correlation with like what's the ATR of whatever time frame. I'm not going to do that right now, but I would. This is if I was just first researching a stock, that's what I'm going to do. I'm going to pull it up and take a look at it. Well, where did I? Oh, I got that's an hourly ATR. Oh, I don't have that. You know what? Skip it. It's so I would look at that. I would want to know. I want to know right now. But the way that I usually use my computer, like I normally have the main thinkorswim here, and I would use that quite a bit. But right now it's on a different computer monitor just for privacy reasons. So it's making my normal flow of finding things a little different. Implied volatility. Okay. So what one thing that we can do, or the general thing we're going to do is going to go like this. Oh, actually, we're not going to do that right for 1 day. This is 1 day, right? 1 day. Sorry about that. Okay, 1 day. All right, 1 day. But what's our option chain look like for 1 day? I really went off too much on a tangent on about that implied volatility move. Sorry about that. Then wondering what the ATR is, but this is looking pretty good. Look at down here at the 5 delta. We have money. We have money at the 5 delta. It's not a whole lot of money, and that's quite okay because it's always a good idea to find small ways to make money and look to expand that. It's better to know how to make 65 bucks than lose money. Like if you've only experienced consistent losing money, then consistently making $65 every week is it's staggering. It's magnitudes of time better when you can consistently, reliably, predictably make about $65 every week from the stock market without needing to leave your house. I don't think there's a lot of people that can do that. And I think when people are making money with the stock market, maybe they're making a lot more or they're doing it in a different manner. But I'm telling you, it doesn't take much. Like, what would this be right here? I would have to look at the chart a bit more. Um, yeah, I guess the point is like, if you don't know how to make any money in the stock market, don't poo-poo making 65 on a consist in a day. But more realistically, the buying power of this would probably be pretty big. So we're gonna look at down here at the 5 delta. So we're out 8 days. We're looking at next Friday, where there's almost a $60 move being priced in. So let's just use $60 to be more on the safe side because the market's been a little bit moving a little more to the downside lately. So we'll just say minus $60. Now, if I was really going to place this trade before I was going to place this trade, or if I was really going to place this trade, I would go out of my way right now and I'll just find it. Oh man, I guess I don't know why I'm old manning over like telling you like this is what I do. This is just the way I do it. I should be thankful that I built such good habits in myself. All right, so we're looking at what time frame? 8 days. So 1 week. All right, about a week, right? We got about this is pricing in about a $65 move, and this is saying about a little less. Okay, that doesn't shock me. A lot of times this will be less. I've noticed that I'm not shocked if it's about half, if these are about half of each other. So let's price in a bigger move. So we'll price in what is that? Take the current stock price minus the higher of these two numbers, just to start with. It doesn't, like once you know this higher number, you can start easing it in. This would be like one of the most outside numbers of our parameter. Okay, 9, 959, about 960, about 960, 960. Look around a 15 delta. So as far as safety, if we're selling around a 5 delta, we're extra safe because it's considerably more out of the reach of what thinkorswim is pricing in through implied volatility. And when we take a bit more of a conservative approach and we look at the 2 week ATR on a weekly chart, $65, we could fine tune it more. Probability of in the money, 17%. Where's our 5 delta? 900. Probability of in the money. So this would be a way less stressful trade. And there's anything in between. I mean, you can do anything. Down here, you're making now one thing that I don't know, like service now, sometimes it has a pretty big bid ask spread. And when I'll go to place a trade, it's gonna automatically like lower the ask and the mark keeps moving. So sometimes it's a little finicky to get filled on. I'm not sure if this would be the same. It could be, maybe. I would have to test it out. But that would be something that to look at. But based on what this is saying is maybe around $200, for roughly about a week with a very low probability of it happening. So, we talked a little earlier about making 65. So if your goal was like, if your goal was I'll say $100 a week, and you brought in 200, and you're only hoping to keep 100 or 50 out of that, 65 out of 200, then you have a high probability of keeping that 65, because if for some reason things start moving against you, you have a lot of cushion. This initial this initial premium that you take in oftentimes is helps you ride out storms. Sometimes if you need to adjust a trade, it can come from there, but it's like low probability of happening. I don't think it would happen, but it's pretty good for a five delta trade. What's the what? I have to take a look at the chart. Oh, here's our, yeah, 900. Look at that. That's way down there. Even so 950 would be into this candle. Like one thing that we could do if we want to find the quickly find the like 950. That's 950, but let's move it. Ten what? The Oh, that's bonkers. All right, that really went bonkers. It's all good. Oh boy. Yeah, okay, perfect. Oh, what happened to perfect? Ah, where'd perfect go? Oh, look at that. There's perfect. Oh, holy macaroni. Look how tiny that is. Oh man, I'm used to drawing these on on a daily chart. Oh boy. It's like 1 week, right? From the 2 days. Okay, we can edit that. Well, we don't have to edit it actually. We'll just oh, it's gonna make my life easier to have it be longer. Okay, so there's 950. Is that gonna? Oh, dang. I hope this doesn't throw that over on me. Sometimes when let's see. Okay, it seems okay. Sometimes when I've done that, it messed up the bottom calendar part. All right, there's our 950. All right, nice and easy to. Oh, we're flipping through too many different things here. Get back to that monthly. There, that's what the problem was. There we go. Okay, there's our 950. So 950 would be in that this month's candle so far of low of trading at 950 and 950, 12 delta. Possibly look at that. It's not the worst bid ask spread, but you're looking getting around 500 bucks. Not too bad, huh? What sort of margin? Your margin might be different. It probably will be different to some degree, but it's looking at about a $12,000 margin for me. Look what it would do to my my buy. I've ran my buying power pretty low. Towards the end of the week, my buying power gets lower. So I am I am pushing it. I'm at like 13, probably hit 12 sometime today. And and honestly, I really like to keep my buying power closer to 20,000. That's what I've done in the past. And sitting in front of a computer all the time is really making it easier to manage it, and I don't feel stressed out at all. I think if I was working a full-time job and I didn't have the ability to keep my finger on a pulse, the buying power is that cushion of insurance, you know, and if you can't if your insurance is doing the trading yourself and being proactive, if you can't do that at the moment, buying power helps cushion that and be there. Although, you know, you don't make as much money, generally speaking, you can make more money by maximizing more of your buying power. So it's all these things you're balancing in, and it really is just balancing your own portfolio for living your own life and doing whatever you can do. And these things are measurable, and um, it's really amazing that you can control it. You know? So that's where I'm going to end it today. And I think that what we'll do is going forward. I'll change up how I'm doing the bubbles. Going forward, I will change up how I'm doing the stock market show called Bubbles.